Welcome to Green Shares channel. We'll continue our weekly digest in which we share the latest information from Green Shares market for the past week. And as usual, we'll start with the global news, and today we'll start with the COVID cases as well. So the cases with the coronavirus are topped up, and we have more and more of them. But we also have a few more vaccines. So Novavax registered their vaccine with 89.3% efficiency against latest UK trial of the coronavirus, and 95% efficiency with the previous one, as well as Johnson & Johnson to have a 72% effective vaccine for the US cases. And also we have about more than 1 million shots of vaccine from Pfizer and Moderna in a straight of 10 days administered at 29th of January. So the vaccination program is continued, and we hope to have they're going and getting the herd immunity soon. But again, more vaccines, more vaccinations per day, that's kind of a good pace, so keep hoping. And then we'll switch to some ways of Biden administration could help implement more EVs. First of them will be getting back the federal tax of $7,500 for GM and Tesla, who already sold more than 200,000 EVs in the United States, and they were not available for this federal tax credit anymore. And also we may have the car allowance rebate system with the $4,500 savings available as well. So those two could help the EVs to increase the numbers. And in addition to this, we heard from Biden that he planned to replace all the government fleet with electric vehicles, and that is more than 645,000 vehicles, which could be replaced by some cheaper versions of Tesla's Model 3 or Model Y, or maybe some producers of the pickup as Lordstown Motor Corp with their endurance pickup, or maybe Tesla Cybertruck. So that's good news that could be kind of efficient and effective for all the EVs in the United States. And we probably get more infrastructure for electric vehicles as well if the government fleet gonna switch to electric. So good news for EVs as well. And then we'll continue to separate companies, and GM recently announced they are gonna go full electric by 2035. So such a giant as GM also switching to full electric. Well, not as soon, but again, the huge OEMs need some time to switch to electric. But that means more variants, more options, and more EVs and more infrastructure. So again, quite a good news for the EV area as well. And now we'll switch to our trio with NIO, Xpeng, and Tesla. And NIO this week as well have got the price upgrade from the Morgan Stanley analyst Tim Sao. From $33 for NIO to $80, while NIO now trading at about 56, 58. As well as Xpeng also started to be covered by these analysts with the price target of 70, while they are in the 47, 48 range for now. So quite a good news, and they are based on the China increasing demand for electric vehicles. There is supposed to be more than 1.7 million new BEVs in China in this 2021. So more companies and more growth for those companies who could produce quite enough for China in terms of BEVs. But not all news for Xpeng are good, because they recently announced that they need to recall about 13,400 electric SUVs G3 version because of the issue in the inverter, which could pose a safety risk according to the China State Administration of Market Regulation. and that probably gonna drop the already low share price of Xpeng from 47.7 to even lower values. But again, sometimes such a thing happen, and they just need to do all their best to avoid such an issue in future. And now we're gonna switch to Tesla, and yet one more again. Analytics and Argus research analyst Bill Silsky upgraded the share price from 777 to more than 1,000, actually $1,010. So that is quite bullish, and this bullish prediction is based on the fact that Tesla is undisputed leader in the electric vehicle space, mentioned the analyst, and also he mentioned the progress of autopilot and full self-driving from Tesla, naming them as the leaders in this area, and that's quite a good news. But getting back to the report, the earnings report from earlier this week from Tesla, there were some negative reaction from the market, especially because Tesla missed the targets of $1.05 EPS and reported only 80 cents. As well as they also reported 46% gain in revenue at 10.7 billions, and actually that's quite a good numbers, and we will get back to it. But again, that was a negative impact on the analysts in Wall Street, as well as the approach from Tesla to announce their long-term target of delivering more than 50% more vehicles on a long-term basis instead of getting the exact number for year 2021. And that seems to be quite efficient way, because they're focusing on getting on their pace as fast as they could. And they also emphasize on the fact that this year should be much more productive in terms of deliveries, and they definitely need to overcome the 50% at least in this 2021. So we probably could expect something about 850,000 or maybe 900,000 cars delivered in 2021. And speaking of the report, we have a separate episode for entirely earnings report from Tesla. But just to go through some small details and basics, they actually achieved industry-leading 6.3 operating margin, despite the stock-based compensations which grew up in this quarter. But also they have operating cash flow as 2.8 billion in 2020, as well as 1.8 billion in Q4 only. They also have a cash equivalents of almost 20 billions, and they delivered more than 500,000 cars in 2020. We've already mentioned this. They have started the production of Model Y in December, and they already have a lot of pre-orders for the Model Y in Shanghai. And they just released the updated Model S and Model X, started in January. And we also will see the Model X Plaid we haven't expected before. And we also need to mention that Tesla planning on delivering their first Tesla Semi by the end of this year. The progress on Berlin and Austin is incredible, and we will later see the photos. But again, according to the numbers, they have the total revenue of 10.7 billions. They have automotive revenue of 9.3 billion in only Q4 2020, which is 46 year-over-year growth. As well as they do have automotive gross margin growth of 24.1%, which is incredible. Again, despite the fact they declined the price for their models by 11%, And also need to mention the growth in the storage deployed energy market seems to be blowing up for Tesla. They have more than 1 gigawatt, 1.5 gigawatt of storage deployed only in Q4, which is 200% growth. And according to the current capacity, all their plants, Shanghai and Fremont, to have capacity of more than 1 million cars to produce, as well as Berlin and Texas haven't yet mentioned here, which are seem to be finishing the construction. Tesla produced the fastest ever car in mass production, the Tesla Model S Plaid, having less than 2 seconds from 0 to 60 and less than 9.3 seconds in quarter mile, which is faster than Bugatti Veyron and Bugatti Chiron, which is 10 or even 20 times more expensive than Tesla Model S. And they also have a penetration on the market for the United States grow significantly to 1.5% of the all vehicles, and more than and about 1% for China and Europe. That is quite good progress. And the EPA range seemed to be increasing. The difference between Tesla EPA range and the competitors of EV sector is growing. And all of this is quite a great pace. We have the updated Model S interior front and back with a lot of new competitions and displays with entertainment part. We also mentioned the progress on the Berlin factory. This factory seemed to be almost ready. You could see that the interior is also quite on the latest stages of finalizing, and you have the equipment inside already packed in the boxes for this facility, and the great progress for Texas. In addition to the metrics and the charts, which seem to be leading to the non-stop growth for the deliveries, operating cash flow, and 6 quarters in a row with the profits, as well as charts of the trailing months with the targets getting higher and higher, and we could see that the those charts are quite efficient, and they show the growth quarter over quarter in all possible areas. And that's quite a great news for Tesla. So eventually, some things as a missed APS and non-exact amount of deliveries planned for this year could be acknowledged as some negative impact on the analysts and Wall Street. But again, those charts are speaking for themselves. So quite a great year ahead of Tesla, and we'll see how they progress with their factories in Berlin and Austin. But yeah, that's seemed to be all for Tesla for today, and thanks a lot for watching. Hit the like button and subscribe button, and see you soon. Thank you.